we'll get to inventory levels in a moment because we asked Dave Brandon of Toys R Us about inventories. He said they feel pretty good about where they are, not too much more product, if any, than they thought they would have at this point. I want to talk about foot traffic because you guys do some surveys. You do surveys heading into the Black Friday weekend. You do a survey coming out of the Black Friday weekend. And historically, what I've noticed is that, and this is according to customer responses, people are more optimistic about shopping heading into it than they actually end up being. Why do you think that is? Because we've seen for the past several years, right, lots of job growth in this country. The unemployment rate is plummeting. But these are the results. The projections and the actual, and consistently, the projections show that more people plan to shop and then don't.
It's all that turkey. You know, I think it's a little bit like asking voters questions, right? So it's a sentiment that you express on the way in as opposed to what you really do when you get there. So, I mean, I think that's a pretty natural reaction for human beings.
What turns them off?
Well, I'm not sure they're
excited about it, right?
Yeah.
Excited to go shopping.
And then
I don't think there's a turnoff there. I think it's just I think people usually are more aspirational when they talk to someone in a survey about all kinds of surveys than they actually turn out to be. But the numbers look very good in terms of where we're headed for this weekend, so it's going to be a strong weekend. I think one of the headlines, I think really two numbers that are most interesting. One is how many people have already started their holiday shopping, highest number ever, so 60% almost have started, which is almost 10% higher than 5 years ago. So they're starting earlier. And the other interesting number is, for the first time, almost half of all sales are going to be driven by online activity. So those are two pretty important trends, I think, that speak to some of the numbers, because now people, if they shop in stores or out of stores, there's so many other ways to do it. You don't have to actually get up and go to a store, although still, obviously, tens and tens of millions of people will do that.
Shelley, what have you seen anecdotally?
So far, I mean, people are shopping, people are in stores, but I don't think you're ever going to see that big rush that you might have had in years past. You know, if you can wake up and go over to your laptop over there, sign on, buy a couple of things, then do you really need to trek out to that store, unless it's part of your tradition, unless this is something you like to do with your family.
Why is this interesting, by the way? This is Bain Company did some research, right? The consulting firm, and they found that at least for 2015, they expect holiday sales, which extends through past Christmas, to rise about 4% blended, right? In-store and online. Right. How does that compare with what you're hearing from your members?
So our forecast is 3.7% for the holiday.
Much in line with that.
Which is also blended, right? So we include non-store sales too. And that's much better than the 10-year average, which is 2.5%. So last year was 4.1. This year we're saying 3.7. The 2 years before that were 2.7. The 10-year average is 2.5. So it's a good, solid, strong number. And it reflects the strong consumer fundamentals. You know, you alluded to, and I know you'll get to, the inventory issue. Well, but the question is really how strong is the consumer? And then the interesting thing is, okay, so where are they spending their money? You know, where's it going? Because they have it. They clearly have it.
Yeah, and I think it will be a market share game. I think you'll hear fourth quarter retailers coming out of the fourth quarter saying, you know, it was a really good holiday for us, and you'll hear some other people saying, you know what, it was okay. The consumer is challenged. We were hurt by, you know, weather and the rising dollar. You know, people will kind of choose their excuses, but some will win and some will lose.
We do have a nice chart that helps to illustrate the point about inventories. And the reason to be concerned about inventories is that the numbers you're speaking to, right, are just top-line numbers. Revenue is great, but if you can't generate revenue at a margin, you've got a problem. Yeah. No, this is we'll bring up the inventory. We'll bring up the inventory chart in a moment, but that's the big concern. Dave Brandon of Toys R Us says he's in a decent position for inventories, but a lot of retailers are telling us already that they're not, and they are raising this warm weather issue as a reason. How much of a reason is it really?
Well, so I think depending on the segment you're in, it could be a real reason, right? So, I mean, we've got the warmest October in 250 years. People are buying inventory 6 months ago for what they expect to be a relatively normal season in terms of weather. So if you're exclusive in those categories, you've probably got more inventory. Plenty of CEOs and others have said that. That's
Here we go. That's the inventories of the blue line, and that's really perhaps the most important takeaway from that chart.
Yeah, I think that's on a segment-by-segment basis, I think that's the story, and that's what you've heard people talk about. So depending upon regionally and what you're selling. I mean, if it's electronics, I don't think it's the same issue. If it's home goods, it's not the same issue. But if you're in apparel, you know, people have said that it's got potential to be an issue.